Today, ladies and gentlemen, we're breaking down the $113,515 dividend portfolio, currently dripping $450 a month. We are inching closer to my $500 a month goal, and on top of that, it seems to be sell the pop Fridays, buy the dip Monday. So let's jump right into this. Welcome back, my passive income investors alike. Today, it's going to be an awesome video as we inch closer to my goals with my drips, my dividend drip setup, buying shares back, which we're going to break down in my six-figure dividend portfolio over at my computer in a second. But before we do, I can't get over Fridays, guys. Every Friday of every week seems to be this crash in the markets where everyone sells out and the paranoia goes unreal as Trump opens his mouth and spews the verbal diarrhea that he does that brings the markets down. But I find so many people right now are just sitting on the sidelines with cash, and I've talked to so many people and I keep telling them, oh, I'm just buying. I just consistently buy for dividends. I buy when it's up, I buy when it's down. I believe in cost averaging over time. I wish I could have bought Friday and Monday, but unfortunately my phone busted out and I had to go buy a new one, which is what I'm filming on right now for you guys. So I hope the quality is a little bit more better. But you guys can let me know, are you swing trading in this mess? Are you trying to swing trade, day trade the volatility here? Are you one of the guys sitting with cash on the sidelines waiting for the ultimate dip to happen? Let me know what you guys think in the comments section below. And then on top of that, we're going to talk about the greatest human experiment that has ever been done on this planet, because we all know that basically Brazil might as well just be on fire. I have family in Brazil. I have visited Brazil, and it's kind of crazy to think that Bolsonaro, the presidente, is burning down the entire forest because of the regulatory issues and the regulations on the forest. They just ripped away. But there's a lot of convoluted stuff going on there as well. But we're gonna look at all of this over my computer. So just come with me, guys. Let's check all of this out. Alright guys, like I said, I don't care if you believe in global warming. I think it's a bit of a misconceived word because it doesn't have to do with the warming of the planet as much as it has to do with the volatility of the weather patterns. Now, if you live in Canada, I'm sure you're aware our winters have these really weird warm spells where we can go into like the +5s and then all of a sudden a couple days later be in the -20s. But I'm so glad that there is companies that I own like Apple. Usually I'm adverse against companies I own donating to causes. I'd rather them just pay me the dividend and then let me donate. But unfortunately, in a situation like this where I can't even donate to this, and I've looked, if anybody has a donation thing, let me know in the comment section below. But I'm glad that companies that I hold are actually making an effort to try and help this problem out. It's a hard fact to deny, guys, that we don't know what the end result of this is going to be, and it's not our generation that's going to have to deal with it, but it is going to be a fact of reality probably a couple generations from now. But let's get into the six-figure dividend portfolio, shall we? Other than that depressing news. So, guys, we're going to start with the tax-free savings account. We all love our tax-free savings account. All the dividends made in here are completely tax-free. Starting with the most shorted banks in Canada, with Canadian Imperial Bank kind of coming back after the Friday dip. And we can take a look here, guys, and see the dividend yield on this bank is absolutely insane right now. I'm just still holding off on the edge on whether I should be selling some of this out at this point or not. I feel like I might regret not selling at least a little bit of it. I still want to keep the drip set up. I'm having a hard time trusting this company. But they're banks, and banks are banks, especially in Canada here. These kind of banks, they're never going to disappear. But in the short term, we could see some volatility. I'm expecting if this bank misses some earnings here because of the loan loss provisions, they're basically building up for what might be a credit cycle or a small credit crash. What we could end up seeing is this company drop to, I could see it in the high 80s, low 90s. But we'll see what happens in the short term here. I'm just going to keep hesitant, keep watching it, keep trying to figure out what I want to do with it. I've got a few months before next earnings, so I will patiently see what I decide to do with it. I've had some dividends come in from Northland Power, my favorite utility of all time. This company is involved with some of the largest offshore wind projects in Germany, and it was one of the first stocks I ever bought. I sold off a big chunk of this to buy some MO and BTI, which we'll take a look at in a second. But I absolutely adore this company. It's one of my favorite companies, and I'm glad that I still have the drip set up on it, and it's just going to keep me buying some more shares. I'm totally fine with this. I love my exposure to it, and I have no problem buying more at these levels. And down to my US positions here for the TFSA, guys, there's the Altria Group I just mentioned that I used some my Northland Power to buy a little while ago. Apple as well, still doing pretty well. It's nice that it's holding up in the 200s. We're not really seeing it hit back down into the high hundreds. British American Tobacco hasn't been doing too good today. I'm not sure why it's down. I haven't seen too much news on it, but we can take a quick peek at it here just to see the charting. Wonderful dividend yield. It looks like they may have lowered the dividend yield. Maybe that's the issue they're having right now. But I think this company's going to head flat for a while. I don't think we're going to see any major pops or any major sell-offs. anytime soon. So I have no problem buying this strictly for that wonderful juicy dividend. GO Group. This is another one that's been really volatile and under fire lately, and I'm going to say it's going to continue at least until we get through the next presidential election, but I don't think that Warren lady is going to win the election. I think the runner-ups are absolutely amazing. I don't think Trump's going to win, my personal opinion. I just think the Yang Gang, the Bernie Sanders, I think they just have better, more progressive ideas that people are starting to really click to. So I'm hoping that Warren lady that's running is kind of just shoved under the carpet, because she's the one that wants to abolish private prisons. It's funny how I don't even live in the States, but I love talking about the politics over there. So I'm an outside opinion, by the way. So don't hassle me here on your political views, guys, because I'm from Canada. And trust me, it ain't any better here. But anyways, GEO is one that I still love, so I'm glad I have it set up on a drip. I'd love to be buying more of it at these levels, guys. I trust its dividend yield. I trust it's going to be a company that's going to be around for a long time. It's a prison and correctional institution. They deal with everything from kids to basically maximum prison sentences. They're in Australia. They have some global settings as well. It's a beautiful REIT, in my opinion. It's the only REIT I currently own, though I am looking to add another one to my portfolio. And we also have SO. This one's been doing, like I said, it's been on fire, so I've set it up on a drip because I can't personally bring myself to buy more shares in it without using the drip, because it's just gotten so out of hand here and it's so over the top. We should re-break down the fundamentals of this company, because I think they've been crushing it lately, absolutely crushing it. My utilities have been doing very, very well. So let's move into the next part of the portfolio here, my managed account. My managed account, got a little bit of cash sitting in here still, but taking a look at the overall positions, 3M is one that I purchased on your behalf. Always fun to check this out. I also have it in my Royal Bank account. It's the only in the first stock I bought in my RBC account, which I only bought 4 shares of 664 US. Combined total in this account is $999. Which is down a little bit from its all-time highs. But between that and here, I've got about 9 shares of Triple M on your behalf. So it's going to be fun to watch this one over time. But it seems to be laggering to the lower side, so maybe we'll try and maybe get a few more shares of it at some point on the dip. But looking around, guys, things are doing fairly well. Starbucks is still completely on fire, still way up from what I paid for it, just down on the dollar conversion because the Canadian dollar, as we can see, I am down a little bit on it because over the last month, we've seen a little bit of a pop here back into the 76 mark, but the dollar's been relatively flat. I don't see much happening here either. So, I mean, I'm going to continue to buy a few other companies I mentioned as well, like ICE and the International Continental Exchanges. The people that own the New York Stock Exchange are companies I'm currently looking at. I don't think this is going to load right now. A little bit of laggardness going on here. Tesla's still hanging down here. I can appreciate that. Like I said, I'm hoping to get some money. I would have been buying shares now, but unfortunately, I had to buy a new phone, and unfortunately I had to buy an iPhone, and we all know how much that costs. So thank God I own enough of Apple to make it worth buying their products. It's the only reason I own them. If I'm buying their products for $1,000+ I better be owning them and making $1,000+. But finally, guys, we can take a quick peek at the RSP. I'm strictly using this registered retirement savings plan to at some point put some money into a property, whether that's a year from now or 5 years from now. I'm just going to keep building this account up for a down payment in a house, and it's going to defer my income today because, as we all know, an RSP is used for tax deferral. In here, I'm going to start experimenting with the safest investments possible, including index funds, and I'm going to start looking into bonds and anything that might mitigate me away from any major downside risk in the next 2 to 5 years, because when you're playing those short-term games, I obviously want to make some money, but at the same time, I don't want to take on absurd risk, because if you don't have time in the market, you're taking on the chance of losing a lot of money. And I'm in this for the long game, so I don't want to make too many mistakes here, guys. And like I said, maybe we'll jump into the dividends real quick. You guys can see the full positions here, my tax-free savings account. This is my favorite account, bar none. We can see the reinvested cash and the cash that I'm getting paid out. I've got most of it being reinvested. It looks like September, I've got most of the August payments in, but for September, it doesn't look like we're making too much. It looks like we're getting about $130 reinvested, or $113 reinvested, and then getting about $28 USD cash into the account. But because I'm getting about, what is that, about 60, 70, 80, I'm just under $100 worth of dividends. We're getting about $90, $92 worth of dividends in US, which is about $100 CAD. So we're getting about $150 for the month of September, which is not that great, which is why I want to add another monthly dividend payer. But this is just the one account, mind you. We'll look at the other ones. But in the TFSA, I would like to find some more stability in the payments, so the monthly payments are a little bit more consistent, because we can see in October I'm making a huge chunk of change coming in, over $500 with the conversion in USDs. Then November's a little bit laggard, and then I imagine December we're going to be getting some other healthy payments. But we can see some of my best payers right now, guys. Canadian Imperial Bank, which hurts me a little bit inside to see the downtrend it's currently on. I wish I was getting the dividend yield it's offering now, but at the same time, I'm still very happy with owning this company. Northland Power pays monthly, pays me about $50 monthly, which I'm very happy about. And then we can see down here, remember, these are in US dollars. So with the conversion, we're looking way higher up. So for GEO Group, I'd be making over 500 in Canadian. And again, this might be a little confusing for US viewers because you probably only see the US dollars and are used to spending US dollars. But you have to imagine in Canada here, this on the exchange rate, I'm making a lot more on this money. Mind you, I am holding it in US dollars in this account. I do have it divvied up between Canadian and US income. So if I travel to the US or if I want to utilize the US money to maybe do a conversion when the dollar's up more, I would take advantage of the dollar being up or down. So if I'm holding US dollars, guys, and say the Canadian dollar is down, I would try and sell it when it's down and trade it into Canadian dollars so I get more Canadian dollars for my US dollars. It's something that I've recently started playing around with a little bit more, but let's just keep looking at the overall dividends. So for my managed account, we can see I've got a few more coming in September, not a lot. October's pretty dry. November looks like it's a better month in this account, but we're still bringing in a little bits of income here. We got $100 for October, but we can see here, guys, the only drip that I have set up is on MO. It's the only one I'm allowed to set up a drip on, but you can see that my BTI and my MO are really big dividend payers in the overall portfolio right now, which I am super grateful for because I trust the dividend yield. Johnson & Johnson one is one that I recently added that I'm looking to continue to add. It's not really much of a dividend yet. I want to get this up over $100. Same with Starbucks and 3M. Though 3M is getting pretty close because I have $38 coming in from this account, and then I have another roughly $30 coming in from the other account. So that's getting pretty close to 100. I don't like stocks that are paying me less than 100. I like to get at least $50 to $100 a quarter if it is paying quarterly. If it isn't paying quarterly, I like to see a much higher yield, which is why for my monthly payers, like Northland Power, I tend to have a larger share position in. But let's take a look at the final account here. We can see I'm getting $68.61 off my VFV, my Vanguard Index Fund, which holds the 500 largest U.S. companies, but in Canadian dollars. So this ETF is in Canadian dollars. So if you live in Canada here and you want to buy into the S&P 500, I recommend doing it through VFV. It's probably the better way of doing it. But like I said, I don't care about the dividends in here as much because I can't really spend them right away. And this is real estate money. And I'm just trying to keep my head in the game, trying to remind myself that one day I will be getting involved in real estate, and this is how I'm doing it. And then we already showed you the final account, which is 3. Now, finally, my favorite thing to look at, guys, is obviously the performance chart of my overall portfolios against the basic indices, which seem to be holding up quite nicely. And the reason I love looking at this chart because it reminds me that this is just equity upside. This does not include the actual dividend drips. So I absolutely love seeing a chart like this because it basically just shows that, you know, at the bottom line of my portfolio is still holding nicely against the overall indices. I won't be getting charting in until the next few months here. At the beginning of every month, I get to see the update on my performance. So it'll be nice to see where I'm sitting at in this account come finally the end of this month, because come September, we are officially 5 years. From September of 2014 to September of 2019, I'll officially be 5 years to investing. And again, I have been investing for longer than 5 years. It's just, it took me time to get into the portfolio of, investing into basically a stock portfolio through TFSAs and basic indexes with stocks. 5 years. I started with gold and silver, as many of you guys may know, which I sold off a huge chunk of that at the beginning of this year to buy stocks because I'm looking for cash flow. But it's official, guys. I'm almost 5 years deep into my my original portfolio, which is always fun to look at, and it's always a humbling reminder. I almost want to print this off and put it on the wall just to remind myself that, look, like, you've been doing this for a while. You've got some capital gains built into this portfolio. So like I always said, if the portfolio drops at this point, it doesn't hurt me as bad as it hurts you guys, because I could see this entire portfolio drop literally from its highs where it currently sits at 50% before I would start losing equity, which I don't want to see happen, mind you, but it's crazy to say that the overall portfolios are up 50 and 65%. It's kind of staggering to say that because, like I said, the way I look at it is I haven't seen the capital gains in that much aspect of it, but it's crazy to me to look at this charting. So it's nice to see that, you know what, I have some grounding in this. I've done this for a while. So we can see in the beginning of 2014, we had a lot of red, guys. We can see that all down here. It's kind of nice that it actually shows me the percentages and gains and losses between my managed account, my tax-free savings account. But look at how rough the beginning was here, guys. Nothing too great about that. But then over time, we can see we started taking control of the portfolio. And before we knew it, we were outperforming the S&P 500 index. And then before you knew it, I opened up a new account, my tax-free savings account. And as we can take a look here, guys, the percentage and the upsides have been absolutely amazing. At the all-time highs for my managed account is 95.24% rate of return. But we can see we had a bit of a drop off after that. That would have to do with me owning Tesla. But I hope you guys enjoyed this quick update. I hope somebody gets control of the forest fires, the Amazon fires that are going on here, guys. Like I said, I have family in Brazil, and it's crazy to think that all this stuff goes on with all the corruption in the politics. My cousin told me there's never been anybody in politics in Brazil that have ever not been corrupt. There's a lot of corruption that goes on in Brazil, guys, and it's a shame that the corruption has taken it down to causing a national crisis, and the fact that he is not willing to take on as much help as I think he should be. Bolsonaro is not the best presidente, I would agree, for Brazil. But let's cross our fingers, guys, and hope that the world somehow turns around at some point sooner or later here before we end up ruining it and having to live on Mars. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.